Today's topic is selecting the right assets for your portfolio, selecting the right assets for your portfolio that suit your risk tolerance and your financial goals. In the past week, I've been going live. In fact, in the past month, I've been going live every single night talking about your risk tolerance and financial goals. In fact, hello from Australia. Good to see you. In the comments, tell me where you guys are watching from. We are live all over the place on Instagram, on TikTok, here on YouTube, LinkedIn, and Facebook. We are live everywhere. I am reading all of your comments, and today we're going to talk about asset picking. This is one of the most important things that you need to do before you get started with investing. In fact, the most important things that you needed to do was number one. Who remembers who was here Monday night that we talked about calculating your risk tolerance? The most important things. That is the most important thing that the majority of people don't do when they start investing is calculating the risk tolerance. So on Monday night, we helped you calculate your risk tolerance. Now, put in the comments, I want to know how many of you, if you're net worth positive, put a P in the comments. If you're net worth negative, put an N in the comments. We're having people from all over the world here, from Canada, Australia, Chicago. Wow, Los Angeles. We met at Funnel Hacking Live, California. So good. So put a P. We have a lot of P's here on Instagram. So glad that you are net worth positive. Now that we have this out of the way, I want to know how many of you on Tuesday night, actually, again, on Monday night, what did we do? We calculated also your cash flow situation, and we wanted to see if you're cash flow positive or cash flow negative, which means the money that is coming in is more than the money that is going out. That is when you're cash flow positive at any given month or week or year. But if the cash that is coming in is less than the cash that is going out, then you're going to be cash flow negative. This is way more important, by the way, than your net worth. And I'm going to tell you why, because net worth was asset minus liabilities, and liabilities will have good debt and bad debt. And depending on the kind of liability that you have, that net worth can be kind of argued about. However, cash flow is non-negotiable. So put a CP if you're cash flow positive, and a CN if you are cash flow negative in the comments. And that was the foundation of understanding what to do with your goal setting. Because on Tuesday, then we talked about, then now that you know where you are, you want to know where you want to go so that you can figure out which lane to take. Because there are literally 100 ways to go from New York to LA, isn't it? You can take the airplane, you can go south, you can go from the north, you can swim around the globe. But if you don't know that you want to go from New York to LA, then you can't even decide which path to take. So that's why we needed you to understand where you are financially so that you can decide what your financial goal is going to be. Now, how many of you remember the 3 pillars of financial goal setting? The 3 pillars of financial goal setting were, just doing a recap of the previous 2 nights that we did this. The 3 pillars. Number 1, how many of you guys remember? The number 1? It has to be measurable. So we want to have a measurable goal. We cannot say, oh, I just want to be rich. Oh, I just want to be a millionaire. Oh, I just want to be happy. We have to have, like, what does that mean measurably? Like, how do you know you're happy? Like, give me the measurements. I have 5 butterflies in my stomach. That's a joke. That is not. But the measurement of financially, unfortunately, you can actually measure your financial goals. So you can say $125,000 in my investment portfolio account. That is a measurable financial goal. Or for me, my goal with my Investiva business, for example, is to help 1 million moms take control of their financial future. And the way we're going to measure that is that 1 million moms have watched my free masterclass. If that happens, I have achieved my financial goal. So that is a financial goal. So that the measurable part of it. The second point, the second pillar of selecting selecting a financial goal, of determining your financial goal, was what? So number one was measurable. Number two, it has to be realistic. It has to be realistic. Oh, some people here are going to get blocked on TikTok, unfortunately. Okay, we don't have any space for trolls, team. We don't have space for trolls. Each and every one of you who are here, who get it, I appreciate you. If you're getting it, if you understand how important it is to get the money into the hands of women, that is my goal. I want women to have money because I do believe that if women have money, good things are going to happen. We don't discriminate. As long as you are an ally, as long as you are pro women being independent, you are welcome to join the Investiva movement. But we do not have space for trolls. We don't have space for trolls. If my looks are distracting you, then probably this is not the right place for you. Then probably I don't have to dim down my light. I don't have to look like a guy for you not to get distracted. If you think you're here just because I'm getting these comments here, oh, you're so cute, all these, I appreciate the compliment. But if that's why you're here, then you are here for the wrong reasons. And frankly, I don't want to work with you. And I think your time is going to be better spent somewhere else. So let's get that out of the gate. I'm only here to serve. I'm here to serve women. I don't need your money. Yes, I do have a business. My business is amazing. I do make money with my business. My business, I want it to be profitable because I have a mission. My mission is to help 1 million moms take control of their financial future because that is my calling. Because I know that if women have money, if women are put into the position of CEOs, if women are actually decision makers, if they have enough money to have even peace of mind when they're parenting as a stay-at-home mom, if they are in control of their financial future, we are going to have boys, we're going to have men who are less likely to start wars. That is my philosophy. I think the feminine power is much needed, and I think the feminine power is going to need money to have any kind of impact. So if you're here for any other reason than that, then this is not right for you. I had to kind of get distracted and talk about this because of the comments that I was getting here on TikTok. I'm live all over the place. Instagram, you're amazing. But if you are here for the right reason, and if you're getting it, and if you are ready to take control of your financial future, put an R in the comments for ready. Put an R in the comments for ready. And we are going to get today to talk about how to select the right assets for your investment portfolio. Right? And I really, really appreciate, obviously, all of the women who are here in the comments. And I also appreciate all of the men who are supportive of our mission. There are so many beautiful men in our community that are just absolutely amazing. So let's go. We are ready. So asset picking, you guys. Oh, the last part of financial goal setting was, so we had measurable, realistic, and has a deadline. It has to have a deadline. So our deadline, my deadline for my goal for Investiva is to help 1 million moms to take control of their financial future by the year 2025. So it has to have a deadline. And now that you have that, you have my permission to go and start selecting the assets that not only match your risk tolerance that we calculated on Monday, but also match your financial goal. Now you can go and create that map. Now you can go and and figure out how you're going to go from where you are here. Maybe you're cash flow negative, maybe you're net worth negative, maybe whatever it is, maybe you're somewhere in between, maybe your risk tolerance is high, low, or medium. Maybe you are approaching retirement. Maybe you're super young and you have time on your hand. Maybe you're a mom, so you have dependents. Maybe you're single and you don't have any dependents, so you can take more risk. So now that you have all of this, you can go ahead and see, okay, this is how I'm going to get to my goal. Are you guys ready? Let's go. So asset picking, I do have here a presentation that I prepared for you. But step number one, for those of you who are brand new into investing, if you're absolutely brand new to investing, obviously, if you want to get started investing in online financial markets, one thing that you're going to need is a broker. Is it what? Is a broker. So an online brokerage account in the US, there are so many options, and all of them are the ones that I'm about to tell you are verified by the SEC. And so Robinhood is fine for beginners. TD Ameritrade, Interactive Brokers, Charles Schwab, Public, Webull, Fidelity, E-Trade, Stash. All of these brokers are a tool you can use to get access to the online stock market. If you want to gain access to the cryptocurrency market, you can use Coinbase, Binance, KuCoin. If you are in Australia, you can use CMC, Southwealth, or Interactive Brokers. If you are in England or in the UK, you can use Saxo Bank, or DeGiro. If you are in Canada, who are my people in Canada? You can use Questrade. And now I know some of you are like, do not use Robinhood. So Robinhood team is a tool. Robinhood is a tool. And as long as you're not day trading, and as long as your portfolio is below $250,000, because that is the amount that they insure, you are good. So make sure that the broker that you use has an insurance up to the level that you want to invest with them. So that's the reason why I have multiple brokerage accounts, because my portfolio has gone up to about $7 million now. And that's why I had to kind of diversify. I didn't want to have all my eggs in one basket. So I have investment portfolios within different brokers, and all of them up to the limit that they insure. Okay, so that was step number one before you even go and start asset picking. Now we're going to get into the nitty-gritty in understanding what asset to pick for our portfolio. And this is where it gets very interesting. And one of the other reasons why I had you guys calculate your risk tolerance is because profitability. How many of you guys have heard the name ROI, return on investment? I'm going to just ignore TikTok at this point. TikTok has become very toxic. If you're super cool and you want to actually listen on TikTok, come over to Instagram. I'm only going to focus on Instagram, YouTube, and Facebook and LinkedIn from here on. TikTok has become super toxic team, which is very interesting because Facebook used to be toxic before. So, how many of you have heard of the term return on investment, or ROI? Put a ROI in the comments if you have heard return on investment. And if you want to have a high return of investment, what is return investment really? What does that even mean? Return investment, if you copy it from, so when I was studying for the Certified Financial Planning, they have this super intimidating explanation for return on ROI. This is it. The expected return is a compound annual rate of return expected for an asset or portfolio. Investment is primarily a function of the riskiness of an asset or investment. So they make it super intimidating to understand. What this really means, this jibber-jabber, intimidating jibber-jabber really means that the higher your expected return on an asset, the higher it is risk. So if you say, We have, for example, Bitcoin. That's 20 ROI is Republic of Ireland. Oh my gosh, you guys are funny. So, for example, Bitcoin enthusiasts, there are people who are like, oh, Bitcoin is going to go to $1 million. This is an expected return. People, like literally just random people, sometimes on Wall Street, sometimes on YouTube, they come and say, I believe Bitcoin is going to go to $1 million. And that immediately is going to increase its risk. Let me tell you why. Notice that I'm not telling you that Bitcoin is not going to go to $1 million. I'm not telling you that Tesla is not going to go to $5,000 or Apple is not going to go there. But just the fact that people are expecting it to go that high immediately makes it that much riskier. Because this is typically a self-fulfilling prophecy. So typically what happens is that one person says, this asset is going to go high. Joby is going to go to the moon. Dogecoin to the moon. One person sometimes nowadays is somebody called Elon Musk, isn't it? Right? And then they say, they put it out there and people listen to it. And then what happens? Everybody starts catching FOMO. Everybody starts catching FOMO and everybody starts buying it. Then what happens? That asset's price actually starts going up. And then Elon comes and says, I told you, to the moon. And everybody's like, oh my gosh, this guy's a genius. He knew this was going to go to the moon. Whereas all he really did was he put Dogecoin to the map. Again, no hate on Elon Musk again. A little bit of hate, but not too much. But that's what it happens. And he's not the only one who's been doing this. Back in the day, when people used to read the Wall Street Journal, this is what would have happened. So I actually wrote this night story last year. I want to tell you this. How many guys are ready for this Wall Street kids story, bedtime story? I'm going to read you guys a Wall Street bedtime story. All right, guys, ready? I'm going to actually wrote this story like 2 years ago. So a long time ago, in a land far, far away on Wall Street, New York, there was a dude working at Goldman Sachs. He went asset picking one day. He wanted to go asset picking. He went asset picking one day and discovered that a certain little asset has a very high rate of expected return. So the Goldman Sachs dude decided to invest heavily in this little asset. Then a little birdie heard that dude, a little birdie that was sitting on the window of the Wall Street dude, heard him. And then he flew to Wall Street Journal and said, I know something. This dude at Goldman Sachs thinks the little asset is going to go really, really high. And then the call. And then everybody started reading Wall Street Journal, listening to little birdie yelling out. And then the Wall Street dude was invited to CNBC and Bloomberg and Fox Business and Money Market and Benzinga and Cheddar, and everybody started collectively talking about the little asset and how high it can go. Then one day, as this was going on, all the people in the village were catching FOMO. They were like, oh my gosh, I want a little asset. I want a little bit of a little asset. And everybody started buying more and more and more of the little asset. And sure enough, the little asset's price started going higher and higher and higher because there were so many people that wanted it and there was not much supply of it. Until weeks later, the Wall Street dude looked at his investment portfolio and discovered that he has now reached his expected return, thanks to all of the media buzz that he had created based on his expected return. So his portfolio reached the expected return. And guess what he did now? He went and said, now it's time for me to take a profit. And he hit the sell button. And he sold a bunch of the little asset. And then what happens is that Wall Street Journal and the little birdie caught up. And they're like, oh my gosh, the Wall Street dude was right. The little asset went exactly to the number that he said. And now he sold it. So maybe now he must know something. He must know something. Now I have to, Elon Musk in the making, yeah. Now maybe we have to do exactly what he does. We have to go and sell as well. Now the last person who had bought is at a loss because now everybody is selling based on FUD, fear, uncertainty, and doubt. And that's how Wall Street dude became the self-fulfilling prophecy person and made a lot of money and put a lot of other people at a loss. The end. Except this happens literally every day over and over again. That was my bedtime Wall Street story that I wrote 2 years ago. I should have read it like immediately. But so this is how Wall Street works. And that it doesn't mean that you cannot. Are you guys now sleeping like, okay, that was a bedtime story, I'm going to bed? The good news is now you know how Wall Street works. And another good news is you can now actually beat the boys of Wall Street, beat the dudes at their own game. The only thing that you have to remember is that asset picking, selecting the right asset for your investment portfolio has nothing to do with what the Wall Street dude is saying. And I get this question all the time too. And yes, I am on TV all the time too. Guess when I get called to go on Fox Business and CNBC and Bloomberg and Forbes and Yahoo Finance. Every time they call me, I don't watch the news. When I get a call that they want me to go on the news, I know that either the market is going up, there is a FOMO, or the market is crashing. They never call me when everything is fine. And I go and I try to educate, obviously, but the reason why they're even talking about that now, at that time, is because of clickbaits, right? Bragging. No, this is what happens. I actually am on TV all the time, right? And that's when they call me. And I'm telling you firsthand. And that's the reason why I actually don't watch the news. I don't listen to the news because I know what they're doing. They are making money off of our emotions. Because every time, if I go and watch CNBC or Bloomberg or Fox Business for literally 1 hour, I'm going to have all this new kind of ideas that they put in my head that may or may not be suitable to my personal unique investment strategy. So I do not want that cloud. I do not want that noise. I mean, even social media now, of course, like less people are now, fewer people are listening to TV, and many people are getting their tips on social media. And there are so many amazing content creators out there, but there are also a lot of buzz creators out there. And TikTok and Instagram and even YouTube, they reward them too. Like if I really wanted to go viral, I know exactly what to do. Anytime I want to go super viral, I have to hop on a FOMO or a FUD topic. I have to play on your emotions. As a marketer, I know that. I have created so much content that is just purely educational without any sort of emotions attached to them, and they never go viral. Because all the social media now have figured out how to play on the viewers' emotions so that they keep on watching. So that's why now, as somebody who's at your service who wants to serve you, I sometimes have to hook you. I'm like, hey, hook, emotional danger thing. And then I'm like, hey, now that you came, listen to the logical stuff, please. Right? And yes, sometimes I do use my other assets to hook your attention. It's because I actually want to teach you the other side of the noise. So now that you know that you shouldn't select your assets based on what you hear on Twitter, TikTok, Instagram, Bloomberg, CNBC, Forbes, even Yahoo Finance, all the news media, and you're going to ask, okay, how do I know what to buy? Like, where do I even start? Where do I even start? And this is where you start. The first thing you need to understand is that investing, we said your assets need to correlate your risk tolerance. And we also said that your risk tolerance has 3 components: your willingness to take a risk, your ability to take a risk, and your confidence in the asset. And guess what? If your confidence in your asset is going to increase your willingness to take a risk. So you could have as a person, a low risk tolerance, low willingness to take a risk, but you have done so much research on a very specific asset that is like, you know what? I get it. This is the what that I want to commit to. And in fact, the best way to select an asset is, or if you're going with a stock, is to look at it as if you were going to buy that whole company. Now, for a second, imagine that you have $3 trillion, $3 trillion, and you can go and buy any company that you want on the planet, any company that you want. And by buying, I mean now you're going to be in charge of their whole management team, of their company culture, of their products. You are going to be the CEO. You have to now deal with this company on a day-to-day. What company makes your heart sing? What is the company that you actually want to be involved with? What is a company that goes alongside with your moral beliefs? What is a company that is actually making a difference in the planet? What is a company that is going to be around? If you're buying a whole company, you're becoming the CEO of a whole company, you don't want it to go out of business next year. You want it to be around and matter for the next years to come. So put it in the comments. What is, if you had $3 trillion, $3 trillion, what is the one company that you would like to be the owner of? Out of all of the companies in the world. And typically the answer to that comes to a company that you already know. Comes to an asset that you already know, that you already are a customer of, that you already are a raving fan of. And guess what we're getting? We're getting a lot of Amazon, Apple, energy, we're getting Google, solar energy, right? And it really depends on your experience, right? It depends on your experience. It depends on your habits. It depends on your circle. It depends on you. That's why your investment strategy is unique to you. Team, on Facebook, I'm noticing a scammer, an impersonator saying I'm giving Bitcoin away. It has my name and my picture on it. That's not me. Please report it. I'm going to block it as soon as this ends. But These are my only accounts. So if you're on TikTok and you're watching me, this is my only account. If you're on Instagram and you're watching me, this is my only account. If you're on Facebook, LinkedIn, and YouTube and you're watching me, this is my only account. I do not have any other accounts, and I never ask you to send me Bitcoin. All right, I had to point that out. Back to asset picking. Some of the things that I typically like to go after, especially initially, when I'm just starting out my account and I want to go in with confidence, I like to invest in companies that are category kings. How many of you have heard this name? A category king, I learned this in my entrepreneurial mastermind. So there's actually a book called Do Bigger, Be Bigger, Play Bigger. And that is for entrepreneurs on how to make their company a category king. And as I was learning about that as an entrepreneur, I was like, oh my gosh, this can literally be applied to selecting assets. Dunder Mifflin. The Office fans here, huh? And what is a category king? A category king, it doesn't have to be a big category. Like, we're not talking about like, okay, the category king of energy. Yeah, that's great. Or category king of green energy. Category king of, this can also be very, very niche down. Okay. Play Bigger is a great book. If you're an entrepreneur, you have to read it, but it also helps you. The reason why entrepreneurs, if they are into it, they make very good investors is because they can see if the companies are actually doing well or not. So a category king is defined as a company that when you say the category's name, their name pops up. So let's play a game real quick. If I say search engine, what's the brand name that comes to your mind? If I say electric vehicle, what's the company, what's the brand name that comes to your mind? Yeah, the first answer is Google. The second answer is electric vehicle. What's the company? What's the category king of electric vehicle? If I say, and we're getting some Bing here as well. Now, if you're a Bing user, you have your reasons, you know? And if you think Bing is a category king, then that is a category king to you. That's why investing in personal, right? If I say cryptocurrency, what's the crypto that comes to your mind? That would be the category king. Now, it doesn't have to be super big, as I said. So for example, let's talk about shoes, right? So this is going to be like, not many of you is going to know this because it's a very niche down category. So if I say casual shoes for liberal people who like to go outside without socks and want to look hip, it's a very niche category and there is a category king for it. Now, not many of you is going to know it. Crocs, you see, immediately came to your mind. So that is, Crocs is the category king for that niche, right? So it doesn't have to be the huge companies. So that is the first point that I look at. I want to always invest in category kings. That is because my willingness to take a risk is a little bit lower. I have medium willingness to take a risk, whereas my ability to take a risk is actually a little bit higher. So I like to invest in category kings. And even if it's an up and coming stock, I want to go and see how they have niched down. Again, on Facebook, this Kiana Danielle that is saying good news, we wish to gift the community today. That is not me. It's a scammer. I am not gifting the community today with Bitcoin. Okay. So the second thing that I like to look at when I invest, when I select my assets, is companies that improve life. I like to invest in not only categories, the category kings, but I also like to invest in companies that improve life. Steven, flip-flops is not a brand name. We're talking about brand names. So who is the category king of flip-flops? That is going to be your investment. Yeah. The third thing that I look at is companies that solve problems. Companies that solve problems. Companies that allow us to do something better, faster, or cheaper. Companies, then for me, and most important of all, is companies that do something good for the humankind. That is super important for me. And that is the reason why I don't invest in oil. Right? And I know some dear friends who don't invest in Bitcoin because of the harm that it does to the environment. I personally don't see that way. So we have a difference of opinion, but that is why your investing portfolio is personal. And it can be based on your political views or on your personal values. And I'm not here to judge you, but I'm here to show you that with your investment, you are supporting a company that may or may not align with your moral beliefs. And if you want to go in an investment confidently and commit to it for the years to come, especially as a value investor, which is what I teach, then you want to also be aligned with their moral beliefs. You want to also be aligned with what they do for the humanity. Right? So these are the things that you want to keep in mind. Again, I'm going to go through them one more time. So as you're picking the one asset, you don't have to have a million assets. You can only have one or like maximum 5 assets. And I'm going to give you a homework for tonight. This live is going to be recorded on Instagram and is also going to stay on YouTube. So if you want to rewatch it, definitely go back to my Instagram account. Okay. So I'm going to recap. So companies that I like to invest in as a value investor that I'm going to hold on to for the years to come are category kings, companies that improve life, companies that solve problems, companies that allow us to do things better, faster, and cheaper. And most important of all, we invest in companies that do something good for the humankind. How many of you can think of one company right now that you're interested in looking into? Again, I'm not saying buying right now, because we're going to talk about when to buy tomorrow. I'm going to come back tomorrow. We're going to talk about when to buy. We're going to talk about the art of buying low. So I want to know, put in the comments, what was the one company or the one asset? It can be a commodity, it can be an asset, it can be a cryptocurrency. What is the one company? And that's why, by the way, I don't invest in ETFs, because I want to know exactly what goes into my portfolio. So we're getting some answers here. We've got Matterport, Pfizer, we got Nikola, we got Apple, we got gold. You see? And I think yesterday I actually talked about why I don't invest in gold. And by the way, for those of you who are asking, this is not financial advice. This is education. I'm just showing you how I select my assets. I'm not telling you what to buy. I'm showing you the way. Hashtag, this is not financial advice. I'm literally not giving you any advice. I'm just showing you how I select assets, and I'm guiding you to select your own assets. I'm giving the power to you. I want you to become your own money manager. I want you to become your own financial advisor. I want you to be in control. And that's why I educate. I do not give advice. This is guidance. Yeah, we're getting Bloom Energy. So good. So good. So, and then once you look at this right like this, another way to go about it is also going and looking at your credit card statement and seeing what are some of the companies that you're already a customer of. chances are those are the companies that you want to become an owner of instead of just being a consumer. Instead of being a consumer team, this is the time to start becoming an owner. This is your time to start taking a piece of that pie. And some of you might be asking, okay, well, I don't have the money. I don't know how much money to put in. Well, how much money you put in that week, we calculated on day one, how to calculate your risk tolerance. And then if you don't have enough money to invest, then you need to increase your income. And that is why we have our live event coming up Monday, August 29th. I'm going to go live 5 days to teach you how to make more money so that you can invest more. Because there's this big, huge misconception that you can start investing to create cash flow. Investing to create cash flow is not called investing. It's called day trading, and it's super high risk. And if it's not your full-time job, I do not recommend it. I used to do it, and I can confidently tell you that it is not worth your time, and it is not worth your stress, and it is not worth your energy. However, put an M in the comments if you want to make your money work for you. Put an M in the comments if you want to make your money work for you. Make M in the comments if you want to make your money work for you. There is a problem. You can't make the money you don't have work for you. Okay? That's why you actually have to go and increase your income. And that's what I'm going to be teaching Monday, Tuesday, Wednesday. No, Tuesday we're going to talk about investing on the live event. Monday, Wednesday, Thursday, and Friday we're going to teach you how to increase your income so that you have more money to invest. Like literally the reason why we started doing this live events, which by the way, I love doing, but it also is very energy consuming. So every time I'm doing, I'm not going to do it again. But then I get all these DMs, Kiana, I really want to invest. I don't have money. I'm like, oh my gosh, let me teach you how to make the money, because I was there. I thought I can create cash flow with investing. And I did. I went in with $500 and contributed $500 per month. And then in 3 years, I ended up having $50,000, which is great. But $50,000, what can I do with that $50,000? Well, we paid for a portion of our down payment of the house. But is that financial freedom? What is financial freedom to you? Financial freedom to me is being able to choose to work, not have to work. Financial freedom to me is to be able to go to Hawaii for 5 weeks and not care, which is what we did. We just came back from Hawaii. Financial freedom to me is being able to retire my parents and buy them a house, get them a house here in New York, which is what I did. Financial freedom is being able to retire my husband, which is what I did. Oh my gosh, you're from Maldives? You are so lucky. I need to come there. So those are financial freedom to me. And $50,000 investing with itsy bitsy amounts, which is better than not investing at all, is not going to get you there fast enough that you can actually enjoy that money. Well, you actually can. I think I'm losing my voice. So, for that reason, I would like to invite you to go ahead. And first of all, yes, there's going to be a replay of this on Instagram and on YouTube, where you guys can go and watch. As a homework, I want you guys to think about 5 assets that you want to commit to for the next 10 years in your portfolio. And as your bonus homework, I would like to invite you to check out our 5-day live event that is coming up. It is first come, first serve. We are almost running out of seats for VIP. That is where I'm going to go even deeper on how to increase your income and build a wealth ecosystem so you're actually financially free. And the link is in my bio on TikTok and on Instagram, or you can go to wealthdiva.com. If you're on YouTube or Facebook or LinkedIn, again, I think I have the link over there. It's wealthdiva.com. Wealth, WEALTH. Formerly known as Invest Diva, we are now growing bigger. We want to actually help you have real money. And real money is created not just by investing, but also by increasing your income. You have to have both. You have to have both. And that's what this live event is designed for. And you're going to be able to choose your experience. We have different experiences. So you can join as a general admission. The general admission is going to be on Facebook. It's going to be only 1 hour per day. The recording is going to be available for the week of the live event. But obviously, what I would really recommend is taking advantage of the $250,000 worth of bonuses that we've included in the VIP experience. In the VIP experience, you are not only going to get high-level coaching, which, by the way, I charge for. My clients pay me $250,000 for a 2-day VIP day with them. You are going to get 5 days, 1 hour face-to-face on Zoom with me. We're going to get deeper into all of your wealth ecosystem pillars. And on top of that, you're going to get a lot of more bonuses. So really the best value is in the VIP, but you have to be able to attend live because the VIP session, the 1 hour pregame per day, is not going to be recorded. So if you cannot join right from 4 to 6 p.m. Eastern time from Monday until Friday, then you probably shouldn't attend as a VIP. You may consider attending as a general admission experience so that you can watch the replays. Team, I'm almost losing my voice. That was it today for asset picking. Again, don't forget your homework. Go ahead and put in. I would love to see. You can DM me. Go DM me on Instagram. Don't DM me on TikTok. I don't see my TikTok, but DM me on Instagram. Go message me on Instagram. I want to know what you chose for your portfolio. I want to know what your risk tolerance is. I want to know where you are financially if you want to share. And I also want to know what your goals are. So keep me posted. We're going to keep this, reshare this as a live here on Instagram. So I'm going to be back tomorrow. Tomorrow, we're going to talk about the art of buying low and selling high, which is one of my favorite topics, most favorite topics to talk about, because now that you know the asset that you want to have in your investment portfolio, now we're going to talk about when to buy it. Okay, we're not going to time the market though. We're going to price the market. Okay, all right, team. Again, don't forget that these are my only accounts. Everything that I'm live on right now, Instagram and TikTok and YouTube and Facebook and LinkedIn, these are my only accounts. All of them, besides LinkedIn, have a verified blue check mark next to them. If anybody that looks like me, that has the same name as me, and doesn't have a verified blue check mark next to their name, that is not me. If they slide into your DM asking for Bitcoin, that is not me. Stay safe out there. Have an amazing night, and I'll see you guys tomorrow. Bye, team. Bye, YouTube, LinkedIn.